Hello. So one area of major concern for most people is that are the small and mid cap stocks heading towards a bubble territory? They have been going up a lot, and that also got us thinking and a little worried. We decided to dive deep into it and really study what is it that's moving this small and mid cap rally. So what we feel is that it is not so much a case of large cap versus small and mid cap. It is essentially the trends that are moving. The sectors and themes that are moving are the ones that have a high representation in the small and mid cap space, and they have a smallish weightage in the large cap space. So when these sectors move, the movement happens in small and mid caps. For example, the engineering stocks, the infra stocks, you'll find some of the mid cap IT stocks. These are stocks which find a lot of weightage in the small and mid cap space. When these sectors and themes move, it is but natural that the small and mid cap index will move. On the flip side, some sectors that are actually been flat and haven't been moving much are sectors like private banks, some of the large IT names, some big oil and gas stocks. So when these stocks don't move, what happens is that the drivers to the large cap stocks is missing. So as I said, that this is not just a large cap versus mid cap story. The fact is that the trends or the sectors or the themes that are moving have a higher weightage or a higher representation in the small and mid cap space. That is why you will find that that side of the market is moving higher. Let us look at this from the facts point of view. Let us share some data points with you. So what you see on your screen is a graph which shows the weightages based on the market cap analysis of the NSE 500 sectors. So you'll realize that at the bottom, on the left, we have private sector banks, and extreme right, we have the IT mid cap. And this colors actually give you a sense that in these sectors, what is the weightage based on large, mid and small. For example, in the private bank space, 18.48%, which is represented by the gold portion of the bar, is large caps. So clearly you will realize that private sector banks are driven by large cap stocks. Similarly, as the name says, IT large cap, oil and gas, you will find that the size of the golden bar is large. That means that these sectors are dominated by large caps. Now, if you go to the extreme right, you will see that sectors like IT mid cap, auto ancillary, electrical equipments, they do have gold bars, but they are much smaller. In fact, there's immense space for mid caps, which is in blue, and the small caps, which are in red. So this visually clearly tells you that the sectors to the right are more dominated by mid and small caps. So when these sectors move, automatically the money will flow into mid and small caps, and this is really what is happening right now. You will realize that most of the sectors to the left have been a little quiet. In fact, if you look at the 5 big stocks in the market, they are in those 3 sectors. You will find in private banks, HDFC Bank, Kotak Bank, they have been pretty flat. In the large cap IT, you will find TCS and Infosys pretty flat. And even Reliance thrown into the oil and gas space, you'll realize has not been doing much. So when these 5 big boys don't perform, you will find that these large cap dominated sectors don't move. Whereas on the right hand side, you will find sectors that are doing very well. That is auto ancillaries, electrical equipments, engineering, some of the NBFC names. So when these sectors move, automatically the flows move to small and mid cap. So to sum it up, it's not so much a story of large cap versus mid cap. It is more a sector specific story. We went deeper and looked at our own portfolio. So when we looked at our own portfolio composition, we were a bit surprised. We realized that compared to history, our weightages in small caps were a bit large, about 34% versus only about 40%. Traditionally, we have had more than 50% in large caps. As you know, we are a flexi cap fund, so we are kind of agnostic to market caps. But what this told us that as trend followers, it is very natural that our portfolio will move to where the trend is. And the trend essentially being in small and mid caps, that is really where we find ourselves. So this really gives you an understanding as to where the trends are in the market. And as I said, it is not about mid cap, small cap versus large cap. It is the sectors and themes. So in the next slide, you will see that how our portfolio is positioned. You will see that the green bars on the right hand side are those sectors where we are overweight. So clearly we are overweight in IT mid cap, auto ancillaries, electrical equipments, NBFC, FMCG, engineering, pharma and metals. And this, just to refresh your mind, were on the right side of the first chart. That means these were sectors that were dominated by mid and small. Being sector agnostic, being market cap agnostic, we flow where the trend is. And the trend is clearly in this space. This is what is driving the outperformance of the small and mid cap versus the large cap. And this really helps us to understand as to why and makes us comfortable to hold the positions we have. See, no sector or rally is infinite, right? Everything has a time. In fact, you will find that those sectors which are resting right now, which is banks, IT, oil and gas, the last decade belonged to them. They were the best performing sectors of the last decade. And the sectors that are doing well now were actually not doing much. So what you are seeing is a massive churn that is happening. In fact, the underperforming sectors and themes are doing a catch up. If you look at it only from the 6-month point of view, yes, it seems like excesses. But when you view them as a multi-year shift that is happening, we feel that there is a lot more to play out. In the short term, there may be corrections, fair enough, things are frothy. But what you are seeing is a massive sectorial and a trend rotation that is happening into sectors that have not done well for a decade. And when you don't do well for a decade, naturally most of your stocks land up in the small and mid cap space. And this is where the catch up is happening. The next chart I want to share with you as to what have been the trends in the last 1 year. You will clearly see that the performance has come in electrical equipments, again a very big overweight space for us, NBFCs, metals, auto ancillaries, and the sectors that are being dominated by large caps are relatively lagging. So this kind of explains the outperformance that is happening in mid and small cap space. Of course, we are trend followers and we like to move with the trend. We are the ones who respect the wind in our sails. We don't really fight the wind. And we think that this story has a lot more to play out in the long term. We are effectively navigating the boat. And we've had some good months of outperformance. In the short term, there may be wobbles because of excesses, but we think that this story is not about mid and small cap versus large cap. It is driven essentially by those sectors and trends which have underperformed, and that is why they have a large representation in the mid and small cap space. They are doing a big catch up, and this catch up is really playing out right now. With that, I leave you for this month. Cheers.